I just want to go in depth and explain a little bit more detail about the profit and loss statement and tax financial statement for the complete trucking accounting and tax system or spreadsheet that I built. So I sell this on Etsy and also on my website. So if you're interested, check out the link in the description. You purchase this on my website, it's a little bit cheaper and you get 10% off. So before I start, I just want to say a quick disclaimer. This video is for educational purposes only and does not provide legal, tax, or financial advice. The template shown here is a general tool to help track expenses and organize information. So everyone's situation is different, so please consult with a qualified accountant or tax professional before making financial or tax decision. Okay? So this is part 2 or supplemental video of the complete trucking and tax spreadsheet or system that I built. So this video here is to explain the difference between the profit and loss statement and the tax financial statement. So before I explain the difference, let's just jog our memory and see what we recorded earlier. So as you remember in the first video, we watched the first video, we recorded for a load specifically from Seattle to Portland. We recorded the load revenue for that load was $4,300, right? These are all the revenue we received for that load, so $4,300. And then these are all the deductions we inputted for that load. So together it was $419 in deduction, so our net payout is $3,881. And then we have various vehicle expenses regarding that load and other general business expenses for that month. So we recorded fuel expense of $237, and then we had repair of $50, and we had a lease payment that we had to pay in January of $2,500. Okay. And then travel and per diem, so we did a 1 day per diem full, so which means that we get a $64 deductible from the IRS, and then we only spend $50. That means that we have in $64 or $14 of savings from this, right? So it's tax-free income basically of $14 because the IRS let us deduct $14 or $64, but we only spent $50 for a meal, so we have $14 of tax-free income. Okay, and then we had lodging of $100 in January as well. And then business and miscellaneous, we had, let's see, we paid $100 of that. 80% of it's for business use, and the other is for personal use, so you cannot deduct personal use, so it's only $80 that you can deduct, right? And then, so that's what we recorded. So on the profit and loss statement, those information will automatically be pulled over to the January financials. As you can see here, this is the profit and loss financial statement. And as you can see in the profit and loss statement, it says that we have $863.50 in net profit before tax. However, the tax financial statement, it shows that we have $999.50. So I want to explain why there's a difference. It's mainly due to the deductible expenses on the tax financial statement. And just to jog everyone's memory here, and I explained in the other video, the tax financial statement's goal is mainly to increase your tax deductible expenses so you can reduce your expense or you reduce your income so that you can pay less money to the government, right? So if you reduce your income, you reduce your tax liability. Versus on the profit and loss statement, your goal is to increase your revenue by, so how you can increase your revenues, you analyze this statement and see what are your expenses, what are your fixed expenses, and what are your variable expenses, and which of those expenses you can reduce even further and how you can increase your revenue, right? So it really gives you, this profit and loss statement, it gives you like a trend or analysis to see how efficient you are with each of your load and what kind of expenses, whether fixed or variable, can you reduce or can you control more of it, and how can you increase your revenue so you can make more money and keep more money in your pocket, right? So this tax and profit and loss, it looks at two different things. So let's go to the tax financial statement first and explain how to get to this $999.50. So in tax accounting, right, the government, they want to know the full amount of revenue that you receive. So here, the total revenue that we receive is 4,300, right? They don't care about this piece yet. They don't care about your deduction. They just want to know in January or a certain period that we're looking at, what are the total amount of money or revenue that you receive before any deduction? And that's 4,300, right? That's 4,300, which is correct. And then the deductible expenses, now we can go and see which part of it is deductible and allowable, right? So here, now we can go to income and settlement and see, okay, we had a $129 fee that we had to pay maybe to a carrier or a driver, right? And then we had a $100 in cash advance, $50 in escrow, $25 in insurance, $50 in ELD, and then 100 other deductions. So this fee amount is $129 that we pay to a carrier. It is deductible because it's business related. Cash advance is not deductible because that's like you borrowing money. You cannot deduct that. It's not business related. Escrow maintenance fund, that's kind of like you being forced to save money. So it's like moving your money from your checking account to your savings account. So you cannot deduct that because it's not related to a business expense yet. You're basically just being forced to save money. So you cannot deduct this. But let's say like in the future where you had to repair your truck and you have to take some money out of that escrow maintenance fund to repair your truck, then at that point you can deduct it. But as of right now, you just say moving this money to a savings account, so it's not deductible. Insurance deductions, so this is deductible because it's related to your business, right? You have to pay insurance, so that $25 is deductible. EOD and equipment fees, this is related to your truck, related to business, so it's deductible. And other deductions, that's tax deductible, 100. This is where we put it, right? So this is deductible. So of this $419 in total deductions, right? Only this here, this here, and this here is deductible. So of that 419, only $269 deductible. So as you can see on the statement here, it pulls that correctly. So only $269 deductible. And then the vehicle expense, so what lease payments deductible, fuel is deductible, and then repair is deductible. So that's correct, right? So take that amount. And then per diem, so per diem, as you remember, of the $50 we spent, $60, $64 deductible because the IRS gives us a $64 deduction for per diem per day. So that's why it pulls in 64 and not the 50, right? We had a savings of $14, but the deduction is 64. Okay, so lodging is $100, so that's deductible. So total is 164. And then the business and miscellaneous expense, we had deductions, or the business related is $80, so we deducted 80. So total tax deduction is $3,350. Okay, so that's the amount. And then on the profit and loss, you can see it's a little bit different. So we had a net profit of $863.50 and compare that to $999.50. So you're talking about like what, $136 difference? Okay, so let's see. So here, it's not really, this statement here is not really concerned about what's deductible, non-deductible, right? It's just looking at what is your revenue minus all your expenses, all the cash taken out, and what are you left, right? So here we had trucking revenue 4,300, which is correct, right? We had revenue 4,300 right here as our total revenue. And then we had total deduction from that revenue is 419. So we're at $381 and $3,881, okay? So you come here and you see, okay, 4,300 minus 419 in settlement deduction. So then your total net settlement revenue is $3,881. And of that, you have fixed expenses is $2,580, and then your variable expense is $437.50. So your operating expense total is $3,017.50. So your net profit is $863.50, right? So that is 4,300 minus 419 minus 3017.0 is 863.50. Okay. Now I did another tab here to see the difference, why there's a difference here. So as you can see on the tax, we started with 4,300, that's our revenue. Profit and loss, we have the same, so there's no difference. The settlement and deductions where it got a little bit different. So on the tax, we only subtracted 269, whereas on the profit and loss, we subtracted 419. The difference, this 150, is due to this piece here, these two. Remember, I said you cannot deduct this for your tax deduction because this is you borrowing money and this is you putting money in your savings account. So it's not tax deductible, right? But here on the profit and loss, when you look at it, right, this is like your deductions, right? These are like deducted out of your paycheck. And then vehicle expenses. So this amount, there's no difference here. In the travel and per diem, there's a difference of $14. This difference is mainly because we only spend $50 on our travel, right? Because we let's say we spend only $50 for meals, but the IRS let us deduct 64, so we have $14 of tax-free income basically. So that's the difference there. And then the business and miscellaneous expense, there's no difference. And then the total expense, the difference here is 136, so it's basically this 150 plus this 14, so you have a difference of 136. That's where the difference is coming from. So basically that is the difference between these two, the profit and loss statement and the tax financial statement. It's slightly different, it's just because it's looking at something differently, things on a different angle, okay? So also, if you're, want to know like, is the numbers checking out, you can see here, I did a reconciliation to check between this financial statement, the profit and loss statement, and the tax financial statement to make sure they're always in sync. And you can see on the tax financial statement, it also has its own reconciliation as well. So as long as your balance check is always 0, then that means the numbers are correct. Okay, so also right here too, this reconciliation shows that everything is working out correctly. All the numbers are correct. All right. So I hope that is helpful with explaining the difference between the profit and loss statement and the tax financial statement. Again, they're just different because, you're looking at things from a different angle, that's all. And then lastly, I want to explain something that I forgot to show on the previous video, is the load search. So as you can see in the settings here, in the income and settlement, you remember that, you can either put in expected net revenue and expected total expenses if you want to see if, did you make more money than projected or less money than projected. Okay, so for example, if you put $6,000 net revenue and expected expenses $15,000, obviously it's going to be a negative profit, right? Because your expenses would be higher. So let's just change that maybe to 2,000. Maybe I just meant 2,000. So if you go and you look up this load, that information is going to be pulled over. So for example, we pull in this load, so you can see here, this is the actual net settlement we receive, and this is the estimate. So that's where the number is being pulled to. So if you put this on the, if you add the, or you include, expected net revenue and expected net expenses, and then when you do a load search, it can tell you whether your expectation is better or not compared to the actual result, right? So your estimate, is it, did you have a better forecast or a worse forecast than your actual? That's pretty much where the number is going. So that's why I said, like, on the income settlement, this piece is not really necessary unless that's what you want to track, right? It only shows on the load search. So if you need to search anything and you want to see, okay, did I estimate correctly or not? All right. So I hope that's helpful. If you have any questions or concern, please don't hesitate to reach out. And thank you so much for watching.